All right, everyone. Hey, what's going on? Mark P. Markets here. Thanks for joining me for another. I got to adjust this microphone. Thanks for joining me for another U.S. market open price action analysis session. I'm going to be going over the major markets, and we're going to be taking a look at Bitcoin on the smaller time frame to see if there are any day trade setups. Now, hold on a second. To adjust this microphone so that you can hear me better. Okay, cool. So let me, hold on a second. I'm sorry, I'm just having a little, it's a pain to get this thing going. All right, here we go. So to get started, hey, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now we're going to begin here with the Bitcoin chart. All right, I want to run through the major markets. I want to spend basically like the first half of the stream on looking at, price action and levels and all those things to give you a better idea of what's reasonable to expect today and over the next few days. We have a lot of important news coming out, okay? And then I would like to spend the second half of the stream looking at Bitcoin on the smaller time frame to see if there are any day trade setups that we can evaluate and watch. Okay. Now, again, if you guys take those, if you take a day trade setup, keep in mind it can lose money. Okay. I mean, day trades are very hard and they change a lot. It's very hard to take like one trade and have that trade happen to be the winning trade, especially when it's on the day trade time frame. All right. So just hello to a few people. I got Steen, good to see you. Bill, okay, good to see you. Thanks for that comment yesterday on the what was that thing you put in the chat? You put about the Andrews pitchfork. That was very interesting. Thanks for sharing that, Bill. That was very helpful. Nice content. Elijah, good to see you. Jeff, all right, cool. Avi, hey, good to see you too. All right, thanks for stopping by. Got all my regulars. Saw it. All right, cool. So now, what were you saying? Trouble hearing your voice. Oh, okay. If there's any problems with like sound or video, just refresh the browser. That usually solves the problem. Okay. So now, first things first, before I get into this Bitcoin chart, I have to mention something. I am sponsored by 8Cap Partners, okay? And they are a broker, a CFD and Forex broker dealer that's located in Australia. And they offer a wide variety of instruments. They are partnered with TradingView. You can actually trade through their platform through the TradingView trade setup, okay? So that's a nice thing to have because MetaTrader, which is their regular platform, is not the best choice when it comes to analysis. Okay, TradingView, of course, has the flexibility that really makes for a much better experience. Anyway, if you want my training program and you want it for free, if you open an account with 8Cap, deposit $500 and trade a standard lot worth of volume, you can get my training program for free. That's $300 value. Okay, you can get it for free. If you're interested, click on the link in the descriptive portion of this video. All the information is there. Also, there's the link to my training program if you want to learn more about it, markpremarkets.com. And if you're not in my Discord community yet, you should be in there. It's still free. There's a link to the invite in the descriptive portion of this video. Click on that link, go to the Discord community. All the premium channels are open. So if you're a free member, you can see all the content that's going on there. You can see the signals and all the other information. The paywall is coming, and once the paywall is up, all those channels will be locked and there will be a 7-day free trial. Okay, I'll announce it here. Anyway, all right, so enough of the advertising. Let's get into first chart here, which is Bitcoin. All right, now, so here, this is very tricky, okay? We have, keep in mind, Bill, thanks for sharing that news. We have a couple of news items this week. S&P Global, today, S&P Global Manufacturing PMI. Now, I was not mentioning these items in my stream yesterday because they're not as heavy as the main ones, right? I usually stick to just the main ones when I conduct that stream. And that is, of course, the FOMC meeting tomorrow. And then we have Bank of England on Thursday with their rate announcement. And of course, we have Friday. We know what's going on Friday. It's NFP, right? So that's a tricky week. And there's a lot that can change. So you cannot, especially on a week like this, you cannot have opinions because the market doesn't care what you think. All right. The market is going to do what it's going to do. All right. Now, unless you know Chairman Powell, unless you have an inside connection at the Bureau of Labor Statistics and you can get the information before everyone else, which none of you do, that's why you're here, then you have no advantage. All right. And what you think does not matter. Now, so basically these events that we have, right, NFP and FOMC, they basically act as like a binary. They have like a binary outcome, meaning it's either going to be good or it's going to be bad, right? Generally. So if it's good, you're going to see an expansion one way. If it's bad, you're going to see the expansion the other way. There's no way to know in advance which way the market's going to choose. Now, with that being said, I shared a short position on Bitcoin, which if you guys are on the Signal channel, you can go take a look at the details, right? The most recent short is based on this resistance area. Right now, Bitcoin's been reluctant to sell off, possibly because we have all this news coming out and the market tends to get very reluctant in front of heavy news. I mean, look at the S&P, right? And Bitcoin is basically following the S&P. If you haven't recognized that by now, you should really start paying attention because it's just a follower. Bitcoin is not a leader in regards to global markets. It's nothing more than a follower. All right, so S&P sells off, this thing sells off. And right now at this time, this resistance is still sticking. Okay, it's still sticking. The candle right now is still open, so can't really make any judgments on this candle. But if it closes like this, all right, and we take out the low, that's just another, it's an inside bar and a pin bar. Again, if it closes like this, we have the whole day before this closes. It can change, it can close on its high. But if it closes like this and takes out that low, it's another sell signal. It's a third sell signal in this area. Doesn't mean that the follow through is any more probable, but the thing is, we're seeing the type of activity that is reasonable to expect at this location. That's the key piece of information right there. Nothing has changed on the bigger picture. So with the broader context, if you consider the economic situation, all right, with the interest rates and all that stuff, everything favors lower prices, and that has not changed. That same story existed when Bitcoin squeezed. Markets are irrational. So, well, if that's the case, why would people buy Bitcoin? Too many shorts, they get squeezed. Okay, it's not rational behavior. There's no reason for the markets to rally or sustain a rally. Markets are random. They're irrational. How many times do I have to say that? Understand the efficient markets hypothesis. Okay. So the thing is, if those reports, if FOMC comes out hawkish, which is likely, this thing is in a position to get hammered. Okay. And I called the short. I'm not short Bitcoin, but I called that short. It's the second short. The first one got squeezed. The second one is here. We'll see if that thing can reach its target on that news. Also, keep in mind, something like FOMC or NFP, they could be non-events. I mean, I remember for years, FOMC would come out and nothing would happen. It could be a non-event. So that's also a possibility. It's not about knowing what's next because there's no way to know. It's about being prepared for a range of outcomes, okay? Probable outcomes. Can FOMC say, oh, we're going to raise interest rates by 200 basis points? While that's possible, it's very unlikely that they would do something like that. Okay, so you would not include something like that in your range of possibilities. You understand what I'm saying? All right, so that's Bitcoin. Resistance is still in play. Let this thing do its thing. All right, if you're short, give it a chance. That's the effective thing to do here. The general trend in this thing is bearish. You're at a range resistance. Resistance levels continue to be respected. Give the short a chance. That's all I can say. Okay. Now let's move along here real quick. Bond market. I want to try to spend at least a good 10, 15 minutes looking at the Bitcoin on the smaller time frame for day trades. Because I mean that, especially if we're looking at 5-minute charts, I'm gonna have to look at a couple of bars, right? So anyway, this is the bond market. Now look at this. So the bond market's trying to reverse, all right, for whatever reason. Doesn't matter why. The thing is, we can't make any judgments on this. As long as this resistance is still respected, and as long as, and even if that's broken, this resistance needs to be cleared. All right, if those resistances are cleared, then perhaps we have a change taking place. And at that point, I will note the change and start adjusting my expectations. Until that's the case, I'm not jumping to any conclusions. This thing is in generally a bearish trend. This is likely to touch a resistance and fail and work its way to the low. This bullish candle right now can be written off as noise. Bonds take a very long time to do anything meaningful. So this can take weeks to play out before I make any notable changes to my longer term expectations. All right. Right now, rates are still poised to rise based on this trend. If rates continue to rise, everything else is bearish. Okay. And that's where my outlook comes from. It begins with the bonds. All right. So let's move along here. Oh yeah, Bill also put a very interesting link to the Pring-Turner economic cycle, and that's where I get this information. I just like, one day like, oh, the bonds, that's like the main thing. It's not something I made up. Okay, it comes from a very accomplished theory and tested theory. I guess I don't know if you want to call it a theory or whatever you want to call that. Pring-Turner, the economic cycle, that's the basis of this, right? And that's why I follow the bonds. And so far, I mean, it's always steered me the right way. All right. Anyway, so let's move along here. Let's take a quick look at S&P. Then I'm going to take a look at the euro, and then we're going to take a look at Bitcoin on the smaller time frame. So S&P, like I said, has been reluctant. All right. Look at this price action. Yesterday, we get this just very, very tedious red candle. You see that? Yesterday's candle, which is an inside bar. And then today, right away, it wants to be bullish, right? It's up 20 points. It's trying to just hold. This, again, doesn't mean anything. We're still at a resistance level. Look at that. So again, once again, don't think that this market is safe or that this market is out of the clear. There's going to be a lot of nonsense talk, okay? Santa rally, blah, 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 blah. Don't pay attention to that. And if it happens to work out, it works out randomly. That's what you need to understand. You can flip a coin and get the same result. The news is not giving you any type of advantage or any type of useful information. They just want attention. They convert your attention into dollars. That's why they're so happy to give you this information. They convert your attention to dollars, okay? So my point is this can turn into a sell signal, and we have two heavy duty economic reports right in front of this thing, okay? So we'll see what FOMC, we'll see how it reacts. That's all we can do. Usually like a day before FOMC, you cannot take this price action seriously, either way, whether it generates a long or a short, because things can change very quickly tomorrow at 2:30, okay, or 2 p.m. when the rate announcement comes out. And then they have their press conference at 2:30. So yes, we're at a resistance. Everything favors selling activity at this point. We'll see how we'll see the outcome. If they're dovish, this thing will spike. This thing will go higher. Okay, even though we're sitting at a resistance. All right. So let me just go over the euro real quick. Okay, let me just see here. Okay, cool. I'm hearing. Okay, we solved that problem. Okay, hey Sabi, good to see you. All right. Is that Sabi from Brooklyn? FOMC, right? Okay. Glad to see you talk about. Okay, so yeah, let's get into it. All right, cool. So yeah, well, travel. I'm trying to provide value, and I realize that that's something that people want to know about. So wait, hold on. Before I get into that, I want to take a look at euro. Sorry, a little bit of a mess today. So here's the euro. The reason why I want to talk about the euro. And I should probably talk about the dollar first. Hold on, dollar real quick, then euro. So look at the dollar, right? This basically, the euro is just an inverse of this. So the dollar had this nice little push up off of this support level, okay? That's the key thing here, is that support level. That support level, some people argue, oh, it's broken. That's not a break if it's rejected like the next candle. This is a fake out. So now look, it's pulling back a bit. People are going to say, oh, it's a lower high. It's the dollar's bearish. Dollar's not bearish, not yet. If the dollar holds this support again and you get another reversal off of this, which again, the FOMC can cause something like that very easily. If we see the dollar tomorrow, if we see the dollar doing this, something like that, then that just confirms the bullish trend, and it's likely to test that high over the next week or something like that, especially if NFP comes out hot. And, again, they don't want to hear a hot NFP. They want to hear a shrinking NFP. That's what the Fed wants to hear. Anyway, so if you see something like that, this dollar is still poised to go higher. Don't be confused by one red candle. This is meaningless. The question is, does it break support? Only the market can answer that question. I'm not going to sit here and say, well, based on this lower high, the market should break the support. The market does whatever it wants to do. I don't pretend to know what the market's going to do. I let the market tell me. Okay. So does the market break the support? I don't know. Does the market hold the support? I don't know. Whichever it chooses, I adjust. Okay. But right now, based on the general trend, dollar is bullish. Okay. Based on the general trend. So that brings us to the euro. Now, euro is trying to find a higher low support. All right. Again, inverse to the dollar. Now, I'm short the euro, and this thing was working. This thing was like working out nicely. Now it's only, like what, 10, almost 20 pips in my favor. This thing was a lot more in my favor, and it's giving it back. But I'm going to give it a chance. It's risky to give it a chance. It's risky going into the FOMC short the euro, but I'm going to give it a chance because it's on the side of the general trend. I may get stopped out if there's some very, dollar bearish news. This thing will go vertical. Okay. So keep that in mind. I'm willing to give it a chance. I'm willing to take the risk. I have no idea if it will work out or not. All these fakes out there, they're going to come out and say, well, they'll tell you after the fact, well, I was short the euro and I knew it was going to go lower, so I held on to it. I knew it. They don't know anything. Okay, so I'm telling you right now, I don't know, but I'm going to give it a chance because the general trend has not changed. I just went over all that. I'm going to, if this turns into a conflicting signal, which it can, inside bar, we take out the high of the inside bar, I'm still going to give it a chance because that FOMC this can just be noise, pre-FOMC noise, whatever you want to call that. So that's why I'm willing to take that chance. It could be wrong. I can get stopped out. Okay. If it's right, this thing will go nicely in my favor. I gave the same thing a chance, the euro back over here. It was at this area here. I held through. There was a major report. I think it was NFP that I held through. It was one of those reports, and it worked out. Okay, the first report worked out. The second report, which was CPI, that one was counter. So I managed to get out of that on the day of the CPI. I managed to get out of that, right, for a decent profit. So we'll see how this plays out. Okay. Again, anyway, let's not waste any more time. Let's talk about Bitcoin here on the smaller time frame. Now, so I'm going to go to Bitcoin, but here's the thing. So on this example, I'm going to go to the perp. Okay, the perp chart. See this? These are perpetual contracts. So I'll use the Binance one. Okay. Now, does it really matter? Does it matter which one you use? Can you use the spot market for day trade setups? It doesn't really matter. Okay, because the charts pretty much follow each other. They're not gonna really deviate much. So, but for this example, this is the futures contract from Binance. Okay, and it's going to be almost exact. I just want to use it just because you can. Let's go to the 5-minute chart. Okay, actually no. Before I go to the 5-minute chart, before I do that, let's take a look at a 30-minute chart. Okay, why 30-minute? Because I want to first get a sense of structure. Okay, and also I want to comment on yesterday because I each day I'm going to try to conduct this exercise, and it's an exercise to give you an idea of what the thought process is like. I am not taking these trades right now as I'm talking to you about this. I'm just doing this for educational purposes. I want to see if we can spot a setup and see if we can basically paper trade a day trade on Bitcoin. Again, when it comes to day trades, it's very easy to lose. And a lot of times you have to lose at the first couple before you catch the winner. That's the way it is. People think, oh, I'm going to make 5 good trades in a row. It can happen, but it's not likely. Okay. Sometimes we have to test the market and the market doesn't want to cooperate. You have to get out because it's about managing the risk. That's the most important thing. And you cannot have opinions, especially on the day trade time frame. Okay. So, hey, Ben, good to see you. All right. So no, I'm not going to have time to answer questions like that. That's for my Monday stream, but thank you for asking. Come back tomorrow. If I have a minute, I'll take a look at it. but I want to spend some time on with the day trade setups here. Jeff says, just curious about your take on trend lines. Okay, well, so horizontal. I look at the horizontal trend lines. I don't draw like, connect the highs to the lows, like, connect this high to this high, and you have like a negative sloping trend line. I don't use them. You can, channels, trend lines, or when you use two of them together, parallel trend lines, you have a trend channel. The one good thing about them is they are price action based, because you're picking 2 points on a chart basically, and then you're projecting forward. So they at least put your attention into a point in the future, which is it's more effective than an oscillator. Okay, I'll give you that. But trend lines can also be very confusing. So you have to be careful on how you use them. I prefer the horizontal trend lines because they give me support and resistance levels. And I look at those levels in light of the geometry or the price structure. And that's what I go by. I don't sit there, because here's what people do. They'll draw a trend line from this low, right? And they'll connect a few points here. And they'll say, oh, look, the trend line broke and the market moved. Yeah. But there are many times where a trend line will break a little bit, right? You'll take that short, for example. And now, of course, here it looks after the fact, it looks nice. But there'll be many times when you take those trend line breaks and it just reverses in your face. And, I have to adjust that trend line just a little more, right? And how many losses do you have to take, before the thing goes anywhere? So that's where it can become confusing. And I don't like to, I'm a big believer in less is more. So I want the least amount of information on my charts possible. So if you notice, I only use horizontal trend lines and I use candlesticks. There are no oscillators on this chart, even on the day trade time frame. Now, the day trade time frame is a place where, an oscillator can have some use, but I prefer not to use them. Okay, I find they can be very confusing at times. They're backward looking, and less is more. All right, it's just amazing to me how, I can't change your human nature. If you believe more is better, I can't help you with that. Okay, it took me a very long time to figure out less is more, but people don't like that idea. People think more is better. They like to grasp, they like to hold on to that illusion of control. But once you realize that markets are random, you realize there is no control. All right, so less is better. Okay, less everything, less trades, smaller profit targets, all those things. That's better in this environment. Okay, it's just to trade in general. All right, enough ranting. I need to talk about setups here. So good question. The only market guru is the market. That's a good point, Savi. That's true. The only one you should listen to is the market. Right? No one else. Nothing else. I don't care how expert people are. Oh, I'm an expert. All these nonsense people, even the ones like on mainstream conventional news. Oh, he's from Goldman Sachs, and blah, 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 blah. All nonsense. Okay. None of those people are out to help you, by the way. So listen to the market. Okay. Okay. Yeah. Less is more. All right. So your goal as a trader should be to really make actionable decisions on the least amount of information possible. That is actually the foundation of my training program, which no one likes, by the way, because they want some kind of magical strategy. They want something magical that's going to just solve all their problems. And, I go over 6 steps, and those 6 steps allow you to extract the most information possible, the most valuable information, in my opinion, to make an actionable decision. And out of those 6 steps, you only need 4 of them. Most of the time, I use 4 of them. Okay, so I really look to minimize. All right, so let's talk about this thing here. Now, yesterday, I want to bring up something. Right, yesterday, we were watching the price action here, and I basically got stopped out of a short position. Right now, let's talk about, as the day played out here, you had basically a general bullish structure. Okay, intraday, higher lows and higher highs. There are long signals in here. Okay, now I'm looking at a 30-minute chart. So the purpose of the 30-minute chart on the day trade time frame is to basically get a sense of levels, just like I do on the larger time frames, except these levels are going to be relative only for intraday. That also means that these levels are going to be highly random and very noisy. So there's no guarantee they're going to hold. Okay, but I'm interested to see where my potential levels are. I have a support right here in this area. In fact, I have another support right around where it is now. What is that? 23.99, around there. Okay. And I can move this resistance here too. So yeah, these are my levels, okay? And I'm projecting them forward, and I'm using information from history over here to help me anticipate what's going to come next. All right, it helps me form an expectation. It's not an opinion, it's just a general expectation of what's within reason. So I have these support levels. We're sitting on one right now. Now, the support level is not enough. Again, everyone fixates on, it's support, you buy it support. But what's the context? Well, this is bearish. Lower highs, we have a broader lower high right here, double top lower high right there. Okay, followed by another lower high right here. Okay, this momentum is bearish and it broke one support. So right now, these supports are likely to break, okay, if this momentum stays intact, which makes me bearish intraday for now. That can change, all right? If something changes here, I can become bullish just as quickly. But at this moment, that means I lean bearish. I expect more from shorts. I expect less from longs. Now, what should I expect? Generally, intraday for something like Bitcoin on a day trade time frame, I'm only looking for 150 points, maybe 200 points. That's really optimistic, okay? And I'm looking to risk about 100 points, maybe or less if I can. That's it. If you think you're going to make 500 points a day or something ridiculous like that, all you're doing is setting yourself up for trouble. Okay, so let's look back here now at the 5-minute chart. Okay, now the 5-minute chart. I'm looking for what I'm looking for on the 5-minute chart are the setups in line with the context that I just described. So what's going on here? Well, as you can see, we're hesitating at support. Okay, we have a lower high right there. Now on this 5-minute time frame, keep in mind these levels do not carry the same amount of weight as they do like on a larger time frame, so they can easily break. Don't sit there and jump in front of this. Oh, it's a support. I'm just going to jump in because it's a support. Look, okay. I mean, this is not what should be behaving at a support. This is not how price should be behaving at a support. Number one, it should reject it swiftly. Okay, kind of like this candle back here. But then, as you can see, that green candle never went anywhere, and it gave it back right away. Okay, this price action, right? We have the lower high, we have the swift reversal. That's bearish price action, and we're still sitting on that support. So with that information right there, I should know that this is a bad idea to buy or to step in front of right now. Okay, it doesn't mean it won't change in the next 5 or 10 minutes, but right now I do not want to buy this thing. Okay, I should be looking for shorts. How do I short this thing? Should I short this thing right at the low over here? That's also a bad idea because it's very risky. This thing can squeeze very quickly, right? And it would force me out of the trade and I have to take a loss. So right away, I know this. I'm looking for continuation patterns inside this area, right? I don't have one right now. And that's what I took yesterday. In fact, I want to review that real quick after I talk about this situation, because right now I'm talking about the potential setups. You see how quickly this thing changes, right? How much time do we have for this thing to close? This thing still has 2.5 minutes before it closes, okay? This thing may turn into a bullish pin bar, right? It may close weak. There's no way to know. People that jump to conclusions, people that overreact, they get stuck in this, right? They may get long, they may get short, and then the market may just go the wrong way, okay? This is random, all right? Random. So the general structure favors lower prices. So what that means is this. This is a support over here, okay? We are sitting at a support here. At these levels, buying activity may develop. If buying activity develops, like a bullish pin bar, and I want to take that aggressive long, I cannot expect more than this. That's the next resistance, okay? It's not a good idea. Sure, the market can squeeze higher than that, but it's not a good idea. You want to get out. You want a high probability of getting out with a positive outcome, not a high probability of, oh, I'm going to make $1 million today because it's going to go all the way up to where I want it to go. Okay, you want a high probability of exiting for a profit. That probability is here. Why there? Because that's a resistance level. And you better believe all the people that know what they're doing and all the robots and all the algos and everyone else, they're going to start putting their sell orders here and getting out before you. Because the retail trader, hey, I'm gonna get out over here. And meanwhile, everyone's getting out before you. You just can't see them. Okay. So That's why a lot of times you may put your order like right at the level, like, all right, it's going to go to the level. I know it's going to go to the level. You put your order right there and it almost gets there and it turns. Okay. It's because everyone is getting in front of you. People have put their orders in way ahead of you because they know they're not trying to squeeze out every little penny. That's a fool's game. They're trying to work the probability of getting out with a positive outcome, not maximizing their trade. That's a retail misnomer, whatever you want to call it, a retail myth. You have to maximize your trade. I mean, sure, that's a nice idea, but you really have to maximize your probability of exiting with a positive trade. That's the idea that no one talks about. Okay, anyway, so as I'm talking here, we have, what is this? 10 seconds. But look at how quickly this changed in 10 seconds, right? This thing was trying to hold. Look at that. It's going to close weak. Okay. So that's not an inside bar. That basically broke a little lower. So there's nothing to do there. You're still sitting at the support, right? Price is just sitting here. It's 10 minutes after 10. I'll let one or two more candles go by here. Right. And then I'll turn this thing off. But the point here is I'm trying to give you the thought process. Hey, Alex, I checked your yesterday day trade. It reached the target and went even further. Oh, so well, you're talking about the short? Well, I'm going to go over that real quick. So while we're letting this candle develop, I mean, we don't have. Here's the thing. This red candle that just closed, that's not a setup candle of any kind. Okay, so there's nothing to do. There's no setup. If there's no setup, then there's no confirmation to wait for. You cannot react to just what you see. I need to see a setup candle if I'm going to do anything. This current candle may be a setup candle, but we have 4 minutes before it closes. So I need to wait for it to close. I have to wait for the close. This candle may close on its low again, which means there's nothing for me to do. Now, people may say, but the market's moving. Yeah, just because the market's moving doesn't entitle me to taking a trade. It doesn't mean that I need to participate because this is random movement. Okay, people, but the market's moving. There's opportunity. No, when the market moves, it always moves. The opportunity comes with a setup. Okay, the setup is where we can isolate a potential opportunity. That's the whole point of a setup, not just randomly fooling around and all this noise because you don't know how this candle is going to close. Leave all your opinions and all your ego and all your control issues on the side. They're not going to help you here. That's why no one makes money. With day trades, no one makes money. Most people don't. Most of these, especially if they're on YouTube or on TikTok, they don't make money. That's why they're on YouTube and on TikTok. Okay, they don't make money. Normally, at this time, someone asked me yesterday about when I trade. I don't trade the market open. That's why I'm streaming, because I don't trade this time. I found this time to be a very unprofitable time to trade. Okay, it's also Captain Obvious time. Oh, trade the open, right? Volume is the highest, but there's also a lot of random news that comes out and can really, like, you may have a setup and look, oh yeah, okay, cool, setup, and then out of nowhere, the market just goes the wrong way, especially the S&P. Okay, out of nowhere, it'll move the wrong way, like 20 or 30 points in like a minute. Okay, so that's not a very it's not an environment that I like to trade. So I look at the afternoon. Okay, now on Mondays I don't trade at all because I stream at the at the open and I stream at the close. Okay, and I always tell people when no one shows up to my streams, man, I could be in the market right now. Okay, in the afternoon, because that time I found to be much better in terms of day trades, because the market is pretty much established. Okay, and there's no news coming out usually after 2:30. There's usually no news. Okay, unless it's like FOMC or something like that. But normally there's no like stupid little like ISM manufacturing PMI, which something is like that's usually information that's not usually a big market mover, but it can cause an intraday movement. And if you're not paying attention to that, and usually I'm not, this thing moves for some ridiculous reason out of nowhere, and I'm on the wrong side of it. Okay, and it's a random movement, basically, or the setup that got me into it was random, and now I'm caught in this thing. Okay, and I have to get out, and it's just ridiculous. But in the afternoon, you don't really deal with that. Okay, because you don't have those stupid reports coming out at that time. They're all out. The market knows everything at that point, and the levels are established. Okay, anyway, It is the patience to wait for your setup that traders have a problem recognizing. Most use, right, right. It's exactly right, Bill. Um, you know, it's because they're reacting to what they see. Okay, like I said, the captain obvious inside of you can't control him. You just react to what you see. Oh, I feel this, and you're just reacting. That's human nature. Okay, I mean, if you think about how we're brought up, or you think about sports, for example, professional sports. Most of the time, you're taught to react. No, if the quarterback is doing this, you have to react. Okay, I mean, I guess real professionals can anticipate certain things, but most of the time you have to react. Okay, the ball is snapped, you have to react. Well, in the market, you have to anticipate. Okay, you don't react. I mean, that reaction thing, that reaction type of process, it's in everywhere. Okay, here we go. So look, we have a close. All right, now this is a bullish close. Now before we saw this thing was acting bearish, right? All right, so this is a reversal, and I can't explain all the reasons why, but I'm going to give you the trade setup or the confirmation. This is the high here, 23.85. So if price breaks 385, it's about there. It's at 383 right now. Okay, 385, it's about to break it. Okay, there it goes. Signal, stop. This trade is in play. Okay, day trade is now in play long. All right. Now, so that's long. You're targeting this area here, and your stop is here. That's kind of a wide stop, but the thing is, I mean, you have a failed low. All right. We'll measure these things in a second, but all this has to be figured out. I mean, I'm showing you an example, but a lot of this has to be figured out before you're in that trade. But officially, this trade is now active. Okay. So what's the stop? The high is 385. The low is 320. Oh, that's only 50 points. That's not bad, actually. Okay. Typically, you're looking at a 100-point stop on something like this. So if that's about a 50-point stop, you can put it at maybe 65, 70 points. Give it just a little more room, which means you're still looking for 100 points on the profit side. So that's a good reward risk, number one. So what's 100 points from so 485? What is this price over here? This is that blue line right there is 433. So you want to see 485, which is all the way up here. Okay, up here. That's 485. Okay, so basically you want to be targeting this area. Okay, so far so good, right? So far, nice squeeze. Let's talk a little bit about the rationale behind this, or why something like this behaves this way, because people always like to know why. Well, first you have to understand, all of this bearishness invited lots of shorts. Okay, lots of shorts. They all short, and they all short the bottom. If this occurs right here, which should not occur, if it's weak, that means they're wrong and they're going to get squeezed. This is them getting squeezed. They're all getting out, right? They're all banging out of this thing because that's not how it should be behaving. And if you're taking the long on that, you're capitalizing on their mistake. That is how day traders make money. These traders that were all chasing this thing short, and the ones that really got hammered are the ones that got short here, okay, near the bottom where it was Captain Obvious. Now, if you noticed, I was talking short, but I knew what we were at support levels, and I'm always prepared for the reversal. Okay, there it is. This is a failed low reversal, and this one's working out very nicely. They don't always work out like this. Okay, where is this thing right now? 431. So at this point, right about here, you're at 1-to-1 reward risk right there. Okay, so your risk is basically paid for. So what do? Well, at this point, you give it a chance. But if you were more conservative and maybe wanted to take something off the table, maybe you had 2 lots on, for example, 2 contracts, whatever, you would definitely take one off here. Why? There's no sell signal, because you take one off just to take one off. You take one off because others are taking one off. I mean, look at the pin bar developing. Look at the pin developing right there. You just take one off just to do it, just to lock in your reward, just to lock in some reward at a good reward risk. I mean, you're at 1-to-1. Basically, it's not a bad place to take something off. Do you have to take off your whole position? Well, you should give the whole position a chance. Meaning, if you had 2, you give the second one a chance. See if you get a conflicting signal. Right now, how is this thing going to close? We don't know. We have 1 minute, okay, before this thing closes. And then I'm going to turn this thing, we're going to have to wrap this up. But the judgment is not made on this candle. You're going to need another candle, all right, or two to make the judgment, right? So you need to see a candle here. How does this candle close? The invisible candle. How does that close? Does that close strong? Do you get a bearish pin bar? That's when you have to make a decision, okay? It is a good idea to move the stop. Okay, so that's a good question, Stian. Should you move the stop loss higher when you're in profit? You can, but just keep in mind, there's nothing ever wrong with mitigating risk, but if the market's very noisy, you're going to get stopped out a lot for break even. Is that a bad thing? Not necessarily. It protects you somewhat, but just there are times when you're better off waiting before. You don't want to move that stop too aggressively. Okay, look, candle closed, right? Now, how does this next candle, right, the invisible candle, we'll see, how does this thing behave? This current candle, right, that candle close, you can't really make any judgments on this. You can say, but it's a pin bar. It's not really a pin bar, okay? It was stronger, but we have a long tail on the top, but look at the open to the close. That's not a pin bar. A pin bar has a small open to close, like this is a pin bar over here, okay? So we have to see how this thing behaves. If you put your stop to break even, Stian, right, a move like this can stop you right out. That's why I emphasized take something off the table, take something off the table, even though there was no sell signal. Okay, now look, if you had taken something off the table, you can relax through this and be like, well, I locked something in. If this thing even goes all the way to your stop, then at that point you have a break even trade. Look how quickly this thing turns. Okay, so you cannot react. You just have to have like effective behaviors. Taking something off at that level would have been effective. And now look, if you're still in that second one, you can relax through this. Look how quickly it changes, okay? You can't make judgments intra-candle. I said, and the candle open, I said, let's see how it closes, right? You have to wait for 5 minutes. All right, so do you understand how that works? I mean, I'm going through a lot of really detailed stuff here. I should probably be charging for this, but because you're not going to find this anywhere else. Okay, no one knows, no one has the experience that I have. Most of these clowns have only been in this game, a couple of years. They have no idea how this works, and they're just going by their Captain Obvious, ideas, and they're just basically looking to get your attention and turn that into money. Okay, that's what a fake guru is all about, and they're actually very smart, because making money in the markets is extremely hard. Making money as a fake guru is actually very easy. So that's a much better route. If you're a beginner and you're struggling with money, become a fake guru. Okay. And just, yeah, it's hard work as far as marketing and this and that. But once the money comes in, it's a lot easier than putting on trades. Okay. Anyway. Hey, all right. Hey, we got Kangsa from Mallorca. All right, cool. Exotic island in Spain. Yeah. I'd love to check that place out. Spain has some nice islands. Anyway, thanks for stopping by. All right, so cool. On the small time frames, you stand against algos made by, yes, Kai. Kai, well, you took that from my. I actually had a whole rant about that. Who most operate on a loss, pointless. Well, that's interesting. I wasn't familiar with that they operate on a loss, but the thing is, if they're working with if they're part of a market making firm, they're either hedged. I mean, there's countless reasons why they do what they do. They may be just making a market, okay? And they have to do certain things to make a market. But yeah, you are up against the best and the brightest, like physicists, in PhDs in physics, all right, from MIT. If you're not a PhD in physics, right, and you're up against that guy, again, you're the Pee Wee League football player trying to play in the NFL. Okay, so understand that. You need to understand the thought process. Now, even with all those great smarts in engineering, markets are still irrational. They're not playing the same game that we play as a retail trader. There is a way to make money as a retail trader, but it's not easy. Okay, and that realm is the behavioral aspect. Like everything you just saw here, this is all based on behavior. I have no oscillators. I have no nonsense. I made that decision on the least amount of information possible. Okay, my training program is the foundation of this. What I talked about here, I don't talk about in my training program. I don't cover day trades, but all that information I basically process here on a micro level and much faster. Okay. And I'm very quick to make decisions. You have to be. You can't let the market run away and you be on the wrong side of it. You can't sit there and say, well, but my opinion, you can't do that. All right. Take the loss. You're better off taking the loss. Trust me, a small loss is good. Okay. Hey, Barack, how are you? All right, you guys. So the best algos from quant funds have an impressive Sharpe ratio, but most operate on a loss, and any advantage is always only temporary. Interesting, Kai. That's interesting information. So even they have a problem with maintaining consistency or any type of advantage in the market. And these are the best and the brightest. Okay, these are the best people in the world. How are we supposed to compete in this game? You have to look at the market from a behavioral aspect. And before you can even capitalize on the mistakes of others, you have to separate yourself from that group of others who make the mistakes. Those others, that's the herd. And we all start out in the herd. Okay. And most of you are in it and don't realize it. What makes you a member of the herd is your behavior, your conventional thought process, and your reactive behaviors. You need to first recognize that those are the liabilities and then separate yourself from them. It's very hard to do that. It's very easy to just be mindless sheep and follow because we like that sense of control. It's appealing to human nature. We like that. We like to be part of a group. Okay. You have to separate yourself from that. Trust me, it's no fun. Okay. So anyway, that's the story there. I got to wrap this thing up. You guys, I hope you got something out of this. I hope you enjoyed the stream. Check out my links, click the like button, check out my links in the descriptive portion. If you're not in my community, join it and all that other stuff. Okay. So thanks again for joining me. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you for watching.